Hello, Intactivists! Today we're going to be talking about the bond market and some other crazy news that is probably indicating that it's time for you to go and get out and leave, or at least be safer, because there is crazy things coming down the horizon, actually, that are here right now, that are going to be interesting to navigate. Well, let's go ahead. And of course, we're going to go ahead and do some stock charting. So yeah, without further ado, let's begin. All right, so on the Fear and Greed Index on CNN, we are at fear. But if you look down here, the CNN Fear and Greed Index, they are made up of 7 indicators. The market momentum, extreme fear; stock price strength, extreme fear; strength price breadth, extreme fear; put and call options, extreme fear; market volatility, extreme fear; safe haven demand, extreme fear; and then junk bond demand, extreme greed. So if you get rid of the junk bond, we're in extreme fear. Everybody is very afraid of this market. People are sniffing something out like it's going to be pretty bad. So yes. Then the MMRI, or the Mannarino Market Risk Indicator, we're at 324. We're at extreme risk, really high levels. So I would be very careful with what's going on now. Yes, so we are in extreme risk for a stock market correction or crash. So if we go to the S&P 500 heat map, you can see that this week has been horrendous. Everything is in the red almost. Energy is kind of a mixed bag. Energy kind of eked out a gain. Restaurants did pretty good, but other than that, everything is in the red, as you can see here. So bond vigilante. So maybe you've been hearing about bond vigilantes and you wonder what that is. Bond vigilante is a bond trader who threatens to sell or actually sells a huge amount of bonds to protest or signal distaste with policies of the issuer. Now, who is the issuer that the bondholders are having a problem with? It's the U.S. government. Yes, it's the U.S. government. That's what is being on the news. Now, why is this? Well, let's look at it. So these are the bond rates up here. Let me zoom in here. So these are the bond rates. At 1 month, you have 5.42% yield on the 1 month treasury. You can even go to a year and get 5.42%. Why would you hold it for 20 years or 30 years and get less? Especially when you think that your government is not going to last that long, because your government is spending crazy amounts of money with no intention on trying to balance the budget or anything like that. Why would you tie up your money and give it to the U.S. government for 30, 20, or even 10 years and make less return when you could just put it in for 4 months or 1 year or even 2 years or a month and get a better return? Especially when you look at the current U.S. inflation rates. According to this graph, it says that last year we had 6.5% inflation rate, and they're predicting that this year we're only going to have 3.7% inflation rate. Do you guys believe this? Because the bond vigilantes, or those who are just trading bonds because your government is promising you 5% over the course of 30 years, annually 5%, and your inflation is saying, oh yeah, we're only at 3.7%. Like, you're being lied to. And the bond vigilantes are like, you're not going to trick us. We know you're spending more than this. We know inflation's way higher than this. Also, the best way to see bonds is like a money printer. And every one bond, which is $100, will print you an X amount of money. So last year, when bonds were about 1%, one bond would print you about $1 a year. Now that bonds are about 5%, one bond, which is $100 worth, is going to print you $5 every single year. If you bought bonds last year and it only printed $1 every single year, but now you have these new bond money printers, quote unquote, that print $5 for every $100 you put in it, why would you go ahead and buy a bond that only prints $1 when you can have a money printer that is printing you $5? So that's kind of the problem some bond holders are having now, because a lot of them stocked up on bonds last year. And just to make the matters worse, we have the sickness payment pause has ended. Student loan payments have restarted. This month, your first payment is due in October 2023. So, you know how students were going and not paying their college loans and their student loans? Well, that is now a thing that is coming back. So lots of Americans have car loans, student loans, a place to live that's going to cost money. You have credit card bills on top of it. So you have all these bills that you have to go ahead and pay. And we're just going to stack another bill on top of it. I'm sure that's not going to crush the economy at all. All right, and on to charting. So on the S&P 500, we still have this head and shoulder pattern that broke down, retested. It actually retested and went a little higher actually. But now I think we're coming back down and it's starting to pick up steam. So we're going to see if we're going to hit this 404 mark on the S&P. Also, the RSI is not oversold yet. The MACD just inverted, which is bearish as well. We did just break down below the 200-day moving average, which means that the algorithm might be getting ready to sell on the open of Monday. Even says sell right here as well. And we're also below the 50-day and the 20 EMA. So the S&P 500 is totally bearish in my opinion. And I think that this is going to go down to 404. Once again, not financial advice. Gold has been doing amazing. Gold is above the 200-day moving average. We're almost at the $2,000 handle. We're above the 20 EMA, the 50 moving average. The RSI is overbought, so be careful about that. We probably do need to pull back to this 200-day and retest. So we're probably going to retest this and then go higher. The MACD showing some weakness, so I do believe we're going to retest and then go higher because we need to work off some of this overboughtness. And even if you check out LuxAlgo, you're going to see that it's telling us to take profits right here. So, you know, if you are trading gold on paper, you should probably go ahead and listen to LuxAlgo and take money off the table or buy protective puts. So the Mara play, I know we've been focusing on that a little bit. We are below the 20, 50, and the 20 EMA, which is bearish. We are into this descending pattern right here. But once we break out, which we did break out of it, we do have about 1045, 1053, which is about where the 200-day moving average is. We're probably going to go and retest the 200-day moving average. That would be my guess on what's going to happen. So currently I am a little bullish on Mara. We also do have a buy right here, which is a good indicator when you have a buy. Also, the RSI is making higher highs and higher lows. As you can see, these lows are getting higher, and we did reverse, so we are picking up steam. Also, the MACD, we're doing okay on the MACD right now. However, LuxAlgo does not agree with me. LuxAlgo thinks we're going to go to $5 or lower. So 530 or lower, that's what LuxAlgo is saying. So I could be wrong about this. But I do believe that we are going to go higher the next couple of weeks. All right, so Ford, this is an interesting one here. So there is a head and shoulders brewing on the Ford right now. However, we have to make this happen and have this green candle turn red tomorrow, and we need to go and drop below this green line for this to be a head and shoulders pattern, which would be very bearish. However, we're not at a head and shoulders just yet. Now, if we do look at Ford though, this green line has been support for a long time. Look at this green line and just how Ford, every time it hits that green line, just bounces right back up. So I do think as of right now that this is a buy because of this green line here. I do think that we're pretty close to it. I think it might drop another 20 cents or so, but the RSI is not oversold, but it does look like it's starting to go back up again. It might invert. The MACD doesn't look super good, so that's kind of bearish. So the RSI is a little bearish, and the MACD is bearish, but this green solid line here I think is great support. I mean, it hit it how many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 times. So this green line has stood the test of time. So I'm going to go ahead and hope that this green line sticks with me one more time or a couple more times. The thing is with charting, you have to be wrong eventually. So keep that in mind when you do chart. You have to be wrong eventually so it can break out and make new patterns. If this head and shoulder does complete, we are looking at, let's go ahead and see from like right here. So Ford could go to about 742 if we do drop below and this head and shoulders here does complete. So that is a possibility. Allow me to move myself so you can go ahead and see this. Yeah, right there. 742. That's a pretty big drop. All right, and in crypto news, sorry for the brightness, guys. It's Bitcoin season. Definitely Bitcoin season. We are at 20. Once again, I don't know if this indicator is amazing or not. I'm going to be 100% honest with you. I don't know, but I guess right now it's Bitcoin season. Now, if you've been with my channel, especially my old channel, you know that we track Cronos every single week here. So go ahead and look at Cronos. Look at this long descending triangle pattern. It's been like this for a while now. And whenever we break out of this, it's going to pop, I believe. Now, we've been tracking this pattern since November of 2022. That's how far this pattern goes back. Now, we are above the 20 EMA and the 50 moving average, which is bullish. We might break out of this triangle, which would be really bullish if that happened. And hopefully we can break above this 200-day moving average. The RSI reversed, which is bullish. And the MACD reversed, which is also bullish. So I would say that I'm pretty bullish right now on Cronos, but keep in mind if this rejects off of this line, this upper rail here, which is a possibility, it can reject, it can go back down to 4 cents-ish, like 4.2 cents. But we'll see if it does reject off of this line or not. So this is the railing it needs to break. And then the next is the 200-day moving average is the next line it needs to break before it can go all the way up here. Also, if you do check the volume indicators, once we break up here to 7 cents, 8 cents, 7.5 cents, there's huge buying volumes up here, like up here. This is where. And if we break to almost 10 cents, huge buying volume again right here. Like, look how massive that is. But we need to have this green line fight this red here and then fight this as well. And once it breaks to 7.5 cents, we can see this start really going higher. So yes, guys, that is the charting with pots / news. That's all what I have for the day. Thank you for joining me. If you have any questions, comments, or concerns, please leave them in the comments below. Also, keep in mind that we do have a Discord, so you can go ahead and follow my trades, or some of my trades at least, that I put down in the Discord. Thank you for watching. Bye!